Yeah. Well, for more on the earnings release this morning, let's bring in Peter Sorrentino, who helps oversee $13.8 billion in assets at Huntington Asset Management, including shares of GE, Bank of America, and Citigroup. So, Peter, great to see you again. And being that you're a shareholder in all of those three companies, I want to get your take overall first. Having seen all three of those reports, what is your view on them?
Well, thank you, Betty, for having me on. It's interesting because all three of these companies are really interconnected, and in today's reports we really see that. Bank of America benefiting from the capital market activity, strong banking revenues, which were pretty much the same story as we saw at J.P. Morgan and Goldman Sachs to kick off the week. So they benefited from that, but then they also echoed the same tone that Jamie Dimon did for J.P. Morgan. The consumer credit side of the picture is still laboring. It's still a tough way to go. They've still got issues with Countrywide, although it's manageable now. That is going to linger for a while, and there's a lot of stress on the system. Citi's numbers were good, but then Citi's, that was a very busy quarter. You had a lot of things going on.
Yeah.
The joint venture was closed early, so that really complicates the story when you look at Citi's operations.
Well, when do you think it's going to be clearer to understand or know more about the consumer side of the businesses for all of those companies?
This is going to be a slow drag. As long as unemployment, continues to run at these levels, the consumer credit portfolios are going to be under stress. I think we're beginning to see sort of the maximum, deterioration level. So from here, we'll probably run sideways for a while, but that doesn't take the pressure off in terms of earnings. I think it staunches the flow, but this is still going to be a real headwind for them to go against. They've got to generate incrementally more revenue to offset this. So the third quarter is going to be a real struggle for them. The question then comes in, do we see things rebound in the fourth quarter for them? Does the consumer picture get better? You're starting to see, again, GE's reports were indicative of the fact that the macro picture is still very, very tenuous, and that does not bode terribly well for the second half of this year.
No, it doesn't, in fact. And, of course, a lot of concerns about GE Capital and about some other parts of the GE business. But I want to dig in, Peter, with Citigroup, because the big risk, it seems to me, is the management side of Citi, no?
It is. You've got, really for any of the major banks right now, they're under the microscope. There's a lot of pressure on them. A lot of stress is building. They're answering to many masters right now. We've got legislation pending on, coming onto the floor of both houses that's going to dramatically impact the way they do business going forward. It's very difficult to, in this climate, to do what you believe to be the right thing when you've got, so many constituencies looking over your shoulder.
Okay.
It's also, they're restructuring the business. You look at, they're splitting it into two entities. They cleaved off the Smith-Barney portion, so they're radically changing the overall mix, and this is going to put a lot of stress on the talent there.
Well, what would make you pack up and leave, Peter? Leave Citi?
Some of the things that we're very concerned about is intervention, running the bank for purposes other than being a good bank. Do the regulators get involved and make it more of a social organization as opposed to a profit-focused organization? Do we see mandates coming down in terms of the way they have to restructure their consumer business going forward? They raised rates in anticipation of facing new rules on credit cards, trying to get that in the door before it hit. If they can't price their risks appropriately, it really compromises their ability to function as a lending organization. And so that really, if we start to see pressure on that side, that will definitely give us cause to consider opting out of the stock.
Okay, and speaking of stock, I want to talk about GE very quickly in the time that I have. What's going to propel that stock back up from these levels? What's going to get it to $20, $30?
At this point, it would be really, the manufacturing side has got to deliver, because no one at this point in time really truly understands, they didn't understand capital going in, they don't understand all the changes going on now. You've got to just deliver on the manufacturing side. We've got to see revenue firm up, services business, which is where all the profit, really comes from.
Okay, it looks as if we lost Peter Sorrentino, and he ended on the note with GE. So